Good afternoon. This is the video newsletter for Buy Sell Short for Sunday, May 1st. We're starting off with the Dow 15-minute chart. And as you can see, last 2 weeks essentially been vertical, non-stop short squeeze. Fed money just bending the shorts over. And, looking at a chart so vertical, it's tough to say, hey, we're going to go higher, guys. But check out this little circle here. As you can see, we had a big volume spike on Friday. Now, it was the end of the month, and that tends to skew things a little. But the last couple of times we've seen volume spikes, and they haven't been as big as this one, throughout this move in the market, we've seen higher prices in the days afterwards. We've got RSI bouncing off the 50 level, and surprisingly, stochastics also down at the 20 level. And if you look at the chart, the last couple of times we've seen stochastics down here, we've seen, pops in the next trading session. Looking at the Dow daily chart, we have continued to break out. RSI is up to 70. Stochastics is doing what it has done throughout the last several months. Gone up above the 80 level and just treaded water there as the major indices continue to move. Now let's check out the multi-year chart on the Dow. Here is a 3-year chart, and you can see our next target is at 13,136. That's the target I gave on January 1st for the market for the year. And here we are, a 2 or 3 day rally away from hitting that level. Just remarkable. We still have the Fed pumping $7 to $8 billion a day into the market, and we could see stocks make a run to that 13K level as traders and funds try to squeeze the most gains they can out of the market before the Fed liquidity tap supposedly dries up. Now you're starting to see chatter about people saying, well, QE2 is going to end in June, but the Fed will still be reinvesting its money. They will still be rebuying treasuries that get redeemed. So there's going to continue to be Fed money coming into the market on a monthly basis. So you can already see the excuses there for them to try and prop the market up. When the market was selling off there last month, all you were hearing was the reason the market was selling off was because, hey, the Fed, liquidity is going to dry up. Now that is flipped to the positive side, and that's just how Wall Street works. SMH, here is a multi-year chart on the SMH. This is a massive breakout looming on the SMH. We're talking 8-9 year high potential on a break of 37. We could see a move to 40. So very, very bullish action on the SMH. Let's go back to just a near-term look on the chart. Here is the SMH chart right now, and you can see we're coiling right at that previous breakout level. 37 is the next area. And like this chart, like the Dow daily chart, if we go back to our normal view here on the daily chart, there's a lot of downside risk on this, but, we continue to have prices pushed higher. And, as the old saying goes, make hay while the sun's shining. And that's essentially what traders and hedge funds are doing. And as long as they're doing it, we're going to be doing the same thing. Quick mention on the US dollar, it continues to fall to new lows. We are really oversold on the dollar. And if we look at a multi-year chart on the dollar, we've still got another 5% downside risk, back to the 2008 lows. This is probably where we're going to see, the dollar bounce, and probably, by the end of May or early June in anticipation of QE2 ending, I would, not be surprised to see the dollar try to put a bounce in around here and see a sharp sell-off initially in commodity prices like gold, silver, that have just been up ridiculously over the last couple of weeks. So that's, what we're looking at right now. But let's jump into the important stuff, the money-making stocks. GIGM, we sent out an alert on this one on Friday. We bought a half position, added to our positions in this stock, and the reason being Renren, the Chinese social network stock, is doing their IPO on Tuesday. And, this stock, this run right here was an anticipation of that. and we're going to see probably some big-time social media stock momentum over the next couple of days. Our Renren raised their IPO pricing after hours on Friday by 30%, so there was a lot of anticipation. I mean, they're valuing this Chinese IPO at $5 billion. They got $7 million in sales. This is the bubble right now. It's in social media stocks, and it's probably going to continue to be that way until Facebook does its IPO sometimes next year. But, right now we've got breakout at the 200-day moving average at 162 on GIGM. They own Funtown.com. They're in Hong Kong and Taiwan. Logical sympathy play for the Renren IPO, and could be a very nice play for us on Monday. WEBM, Web Methods. We mentioned this on the Thursday video. We were buying this one on the dip on Thursday, and we were rewarded big time on Friday. Big pop on this stock. I would be looking to add this one on a dip under $1.70 on Monday. Again, these guys own a boatload of internet sites, and with the social media hype out there right now, volume is finally starting to come into this one. Remember, we were pretty much the only people buying this stock, 2-3 weeks ago, down in the 130s, on 140s. Now everyone on the mom is starting to jump into the stock. So, we're usually early on these plays, and, that's just the way it is. JSDA, a Jones Soda, a stock we've played quite a few times over the last year. Nice bottoming action on this one. Got an ugly print on Friday, but remember, month end, and keep that in mind as we look at some of these stocks. Nice bottomed out chart. Breakout is 125, 133, 145 plus are our targets here. Stops, $1.17, $1.15, depending on your risk tolerance. MVIS, finally got our breakout on this one on Friday on really heavy volume. Now, even though volume was only about 800K, I'd have to check for the exact number. 90% of that volume came in the last hour, so very high volume breakout on this stock. If you're looking to add positions to this one, 152 and under is where I would look to add to positions, or a break of 160. And our target on that break of 160 is 172, and then the big target is that 200-day moving average up there at 193. RSI moving up nicely. We got positive money flow. Stochastics look good. ADX looks really, really strong. This should be a very nice tech play going into tomorrow's session. Now, biotech stocks have just been on fire right now. RNN was a nice winner for us early in the week. Last 2 days, what this candles are telling you here is this stock trades on the Scamex market. That's essentially, this stock closed at 127 on Thursday, and then they opened it at 120 on hardly any volume. That is typical BS that you will see for Amex biotech stocks. But they are a cancer biotech stocks. The CEO bought 300,000 shares last month. Chart is ready to rock and roll. 129 is the breakout here. Cancer biotech stocks, even the ones that never move, are starting to go on big runs. These guys, the only reason this tanked here was they did financing. If that financing had not occurred, we would be talking about RNN trading up here at the 175 plus area. I have no doubts about it, and I'm thinking it's going to make a run probably this week. The other cancer biotech stock is CYCC. Breakout 150. We're picking up a scalp position anywhere in the low 140s and would add to that position on another break through 150. And target would be, we're going to shoot low. We're going to aim for 165 to 175. Stops right now, very strong support at the 50-day moving average, and that's at 135. Like I mentioned in the Popper Scan video, when you see stocks like THLD, SNSS, even ANX, look at the moves these cancer biotechs have gone on. AEZS. Look at the move this one. These are stocks that never move, cancer biotech stocks, and they're on a tear. So, we are looking for the laggards. CYCC, RNN, and if and when those start to move, then we can start possibly looking at the lower priced ones. MCZ, we got a nice little print on the close there on Friday. Continues to coil at its 50-day moving average. RSI has flatlined. We're probably looking at a positive MACD cross, maybe midweek, unless the stock really gets a spike. But, would continue to monitor what is happening on its peers like COOL. That one is coiling right there on GLUU. Also coiling at the $4 level. These ones pop. MCZ pops shortly thereafter. And, looking at these charts, MCZ has one of the nicer charts. And I think we're very, very close to a very nice move on this stock. NEI, it is what it is. Did it again. Great earnings report and still had a sell-off. But the action we're seeing here is identical to the last earnings report. I mean, this stock went from 228 to 175 the last earnings report. This time we went from 228 in pre-market all the way down to the 200-day moving average at 178. Would love to see this one trade, to close at 179 or 180 on Monday. If we get a green close on NEI around the 200-day moving average, I will be looking for this pattern to repeat and a move back over to. I have no doubt in my mind that we are going to see NEI back here up at the 220 plus area. It's just a matter of, whether it takes a few days or a couple of weeks for that to happen. Sirius, talk about a tease. So close to breaking out. We've got the earnings report on Tuesday. Now, we've got Sirius reporting earnings on Tuesday morning. It's going to be a tough tell, especially after NEI's report. Although, look what OPWV did on Friday, just to get a little bit off topic. OpenWave missed on their earnings report. What did the stock do? It closed up. Just craziness in the market. So, Sirius, we'll see tomorrow, depending how well we do, whether we carry any Sirius into the earnings report. But there's, some potentially positive news that could come that could send Sirius on a run, a Rule of 2 run. And that would be the only reason I would hold any Sirius into the earnings report was, what could end up happening is we sell off, get nice news on the earnings report, like they're going to raise their prices in July or August, or details on their new 2.0 initiatives, and we wake up the next Tuesday morning to see Sirius trading at 220 and just be annoyed. So that's probably how we're going to approach Sirius going into the earnings report on Tuesday. XOMA, it's been 4 weeks since that January popper play. These higher priced bios are on a tear. This stock has just flatlined right now. Breakout is the 20-day exponential at 313. I mean, you can see the just deadline on RSI, stochastics on the bottom. Great pickup, I think, in the mid-290s. Stops 288. And, this is definitely a stock with the way these biotechs are moving that could easily see a 15 to 25% move, over the next few days. Quick mention on BIOD. Triggered stops late on Friday on one of those BS dips, but ended up coming back. As long as it holds above the 50-day moving average and biotechs continue to move this week, this is definitely a stock to consider adding on steep dips like we saw. The other play we had last week, OPXT, continues to coil. Again, as I mentioned on Thursday, no matter what we do, 260 will be a buy spot on this stock. Until it breaks 260, we're just going to continue to scalp the intraday moves of 5 to 10 cents. So that's it for the video. If you've got any questions, feel free to send me an email or just hit me up in the chat room. The regular chat room is back up again. So I will see you guys in there tomorrow. Goodbye.